So, my friends, welcome to a new video. I already mentioned it this morning in the Bitcoin update video, or rather, I already announced it. There will be a short video about what my current investment strategy is when it comes to stocks and ETFs. We know that right now we might be in a war situation, not just Russia and Ukraine, which is still raging, but also Israel and Iran, who are fighting each other, and where the US could get involved at any moment if it comes to that. So, how do you invest best in times like these? For months now, I've been trying to sell off some stocks from time to time, just to take some profits, just like I do in the crypto market. We're seeing signs in both the crypto market and the stock market that we might be facing a big, major correction sooner or later. The stock markets are at their limits, and the ETF markets have also been stretched to their limits at times. Economically, things aren't looking good at all, and now we might have two wars on top of that. There really aren't any signs that this whole system will just keep going up and up forever. Instead, it looks like in the coming weeks and months, we might actually see a bit of a dump. But in my opinion, if that happens, those are huge buying opportunities, especially if you think about taking some profits now and then, which you can reinvest later. So, not just hodl until you can't anymore. You should also take profits from time to time. And over the past few months, I've been thinking a bit about what such a portfolio could look like. Just for the record, I haven't sold everything. I've really only taken some profits here and there. Of course, the ETFs are still running, but you do start to wonder, what happens if we crash? How can I best invest my money at that point, or even take some profits during a crisis period? Because the thing is, if we go into a complete crash, probably everything will drop at first. Stock markets, ETF markets, and so on, everything will probably head downward at first. That's point number one. Still, we'll probably end up in a sideways phase for a very long time without any really significant movement. And for that, I've picked out some other ETFs, which I've actually been investing in for quite a while now. So let's take a look at those now. Point number one, of course, is gold. You should definitely buy physical gold, just like silver, which apparently is on the verge of a huge breakout right now. I can really see it hitting $50 or up here at $49 very easily, especially since silver tends to follow gold a bit. In my opinion, precious metals are still essential for diversification, and that's exactly how I've handled it, by owning them physically. But not just physically, I also added the physical gold ETF to my portfolio. Why? Because sometimes I want to be able to trade a bit more quickly. The thing is, you have the physical gold, which you'll probably never sell, but of course, if you expect gold to go up to around $4,000, which I still believe will happen by the end of the year, you naturally want to benefit from that in the markets as well. And you can do that at the same time with an ETF. And for that, I just picked the ETF from, where is it? What's it called again? Chart, basic info, index, gold, precious metals. From where do we have it? Alright, let's get rid of the T here, for my shares. Physical gold ETF for my shares. It's also written up here again. This is the ISIN as well, which you'll need if you decide to go for it. I simply chose it to be a bit more flexible, on the one hand, to participate in gold if the gold price goes up, but also, as I said before, to be able to sell things if I decide, okay, this is my limit. I don't want to go any further, and just take the profits out again. That's basically my idea behind it. Then, for further diversification, there's also the Global Water Usage ETF for protection. I've had that one for a while now too, or, well, what does a while mean? Actually, I've had it in my portfolio for a really, really long time. And if we take a look at it, it's a stable ETF, you could say, over the past 5 years, but especially during times of crisis, in my opinion, these things always perform significantly better. Of course, it's kind of a small hedge. You don't necessarily have your money just lying around, especially now with interest rates dropping again, like they have in recent months. That's why I've added the Global Water ETF here as well, just a bit more, because water is something people will always need, especially those who produce water or take care of all that stuff. That's why I chose the iShares Global Water ETF here as well. Alright, now let's move on to something else, which I've actually been investing in for, let me think, about half a year or maybe 3/4 of a year now. And that's the iShares Bloomberg Raw Select Commodity Swap UCITS. The iShares, tracks the Bloomberg Raw Select Commodity Index. The Bloomberg Raw Select Commodity Index provides access to a broad basket of commodities. So, commodities, precious metals, and things like that, these are the crisis assets, the ones people usually say you should invest in during uncertain times. And that's really the idea behind this ETF at the moment. That's why, as I said, I've been saving for 6 months. It's honestly not performing all that spectacularly, I have to say. Even in the last 3 or 5 years, not much has really happened. So, there's no real breakout potential here. For me, this is simply for possible crisis times right now, so you can participate in commodities or invest a little in them. That's kind of my investment strategy, just focusing a bit more on safety. That's why water, commodities, precious metals. Those are the 3 pillars I'm currently building on, or rather, the ones I continue to invest in monthly. If a real crisis does happen, these ETFs probably won't be sold off as heavily and might even hold up better, since people tend to invest in them during tough times. You can see it with oil, too. Whenever there's some kind of crisis, like now with Iran possibly involved down there, then gold shoots up. Well, gold of course, but also oil, which just skyrockets. And that's exactly what I mean by commodities. Right now, a lot of money is flowing into that market. And then there's something a bit riskier, and that's the bond market. I also picked up an ETF for that. You can see it up here, the iShares Core Global Aggregate Bond. It's actually one of the best ETFs I found because it tracks the Bloomberg Global Aggregate Bond Index, and that's not really available, at least not in the German-speaking region. That's why I got this one, because it tracks the index 1-to-1, and that's also something. The demand for bonds, if you look at the bond chart, is currently totally in the gutter. Right now, no one is interested in bonds or fixed income securities in the US. Of course, the money is moving into the euro, the money is moving into the yen at the moment. But that could change again sooner or later. And the ETF I've been talking about for, I think, half a year now or so, hasn't really been down by much either. I think it's currently down about 3 to 4%. But if demand for bonds comes back and there's renewed interest in fixed income securities, possibly also due to massive bond purchases by the Fed, then for me, this could be a little insider tip that I can imagine might perform extremely well. As I said, in my opinion, these are all lower risk ETFs. Of course, if there's a complete crash, they might also take a hit for a short time, but then, thanks to possible bond purchases or because gold is in demand during a crisis, they could recover. That could be really, really good, because interest rates might also be lowered in that scenario. Then there are commodities, precious metals, you name it, oil, gas, all sorts of things. For me, these are lower risk assets or asset classes that we could invest in if there were a major crash. And that's exactly how I'm currently building my portfolio. I can also tell you that I have stocks like Allianz in my portfolio as well. No one is probably going to cancel their insurance during a crisis unless there are payment defaults. What else do I have? Yeah, that's basically it. Those are my main things. What I recently added to my portfolio, I actually mentioned this to you in the Telegram group about a week ago. That was Circle. Circle Internet Group is stable. I wrote about it here, yeah, just about a week ago. Circle Internet Group is, a stock for USDC stablecoins. That should definitely ring a bell for all crypto investors. And I added it to my portfolio. By now, we're up over 30% here, 31% if we go by the current closing price. 31% since, the last purchase. For now, it's still running on an automatic investment plan as long as the bull run continues. For me, it's kind of like Coinbase, where I say, okay, you just go along with it for now. Otherwise, when it comes to crisis-proof investments, of course I still have the MSCI World, the MSCI, China and India. But those will probably drop completely in the event of a global crisis. That's really meant for the long term. Other than that, those were my main things where I would say, okay, for me they're crisis-proof or at least should perform better than the overall market in a crisis right now. Other than that, it's just a few dividend stocks I still have, which generate a bit of passive income. I'd really like to hear your opinion on this. What do you think about it? Do you think it's a sensible portfolio, sensible purchases to, let's say, reduce the weighting of riskier assets a bit here? Or do you think it's complete nonsense, that there won't be a crisis anyway, and we'll just keep pumping forever? I'd be interested to know what you think about these 4 ETFs and whether some of you might even have them in your own portfolios. Otherwise, I'd say that's it from my side. Thank you for watching. Feel free to write your further requests in the comments below, and otherwise, that's it from me. Thank you very, very much. I'll see you in the next video. Until then, bye-bye, and as always, stay crypto.